Revenue growth levels have cooled down a bit, but Greenville remains one of the South's healthier secondary apartment markets. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Greenville, Spartanburg, Anderson update. When we look at the Carolinas, we've seen some really great performances from Charlotte and Raleigh-Durham, two of the best in the country the past couple of years. But we've also seen some pretty strong performances from a couple of secondary markets in the Carolinas. We told you earlier about this quarter about Charleston, one that's performed very well. And another one putting up some good numbers is Greenville, Spartanburg, Anderson. And the key here has been job creation. Let's take a look at a job change chart here. And you can see that annual job growth has hovered around 5,000 to 10,000 jobs over the past 7 quarters. Very solid. And like Charleston, Greenville has done a good job attracting a diversifying list of employers, and that's made these two spots two of the very few secondary markets that have done a pretty good job attracting college-educated young adults, which certainly boosts the apartment market. So let's take a look at some apartment data. Occupancy hanging above 94% for a third straight quarter, up 150 basis points year over year to 94.1%, and that is the best rate among secondary markets in the Carolinas. And occupancy would be even better if not for weak rates in the outlying Spartanburg and Anderson counties. Both of those coming in below 92%. Take those two out and occupancy would be right at 95% for the metro. All three of the Greenville submarkets right around 95%, and Clemson-Pickens County is even in better shape, 97%. And rents, same-store rental rates up 4% year over year. That is down a bit from the peaks over the past couple of years, as you could see. Greenville ranked among the national leaders for rent growth back in the second half of 2010 and first part of 2011. Rent hikes got as high as 6.9% year over year. And that's certainly higher than a market like this one should sustain, and so we've seen some easing, but at least rents are still trending in the right direction. So adding up the year-over-year shifts in occupancy and in rents, Greenville saw revenue growth of 5.5%, and that is 100 basis points above the U.S. average for secondary markets. And the revenue number would be even better if not for softness in the bottom end of the market. This is a trend we've seen all across the South, and Greenville has certainly been no exception. Take a look at occupancy by product age group, 94 to 96% in units from the 2000s, the 1990s, and the 1980s, but a rate of just 92.2% in the 70s, and in that tiny pre-1970 stock, occupancy is even worse, 87.2%. And it's a similar trend in pricing. Year-over-year rent growth close to 6% in apartments from the 2000s and the 1990s, but hikes of around just 2% in apartments from the 80s and the 70s. And going forward, we should see good improvement in those bottom-tier properties as the local economy continues to add jobs, and overall, the outlook for this market certainly remains favorable. And that wraps us up for Greenville. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thanks for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.